Welcome back to the Investing on the Go podcast brought to you by FundCalibre. This week, we're considering the UK smaller company sector and discussing inflation, the UK consumer, and the odd Friday night takeaway.
I'm Chris Sarley, and today we're joined by Simon Moon, manager of the elite-rated Unicorn UK Smaller Companies Fund. Thank you for joining us today, Simon.
Thank you for having me.
So I believe the last time we spoke was about 9 months ago, and we talked about the outlook for UK smaller companies. And at the time, you were quite positive on them. Could you maybe just talk us through the performance and how's that borne out?
They've underperformed larger caps, unfortunately, and a lot of that's due to what's happened so far this year with the Russian invasion of Ukraine. I mean, commodities were already enjoying quite a strong streak towards the end of the calendar year. And obviously through this invasion, you've seen a real inflationary pressure on those. And in the large cap index, commodities make up about, I think it's 22% of the FTSE 100, whereas it's just 11% in the numerous smaller companies index. So there's a big disparity there. And you've seen those companies be the real beneficiaries of significant inflationary pressures in the FTSE 100 and commodities.
Well, obviously, we've had a lot going on. You mentioned the military crisis and also the inflation sort of hanging over markets. Could you maybe talk us about some of the names you've been maybe looking to add during the sell-off and some of the opportunities that you've perhaps seen? Yeah,
sure. We saw, it's important to say that the periods like that are very they're a double-edged sword to go through. They're very painful on a day-to-day basis when you're looking at companies and like and really can see the attractiveness of just not being rewarded by the market or being sold off in sort of a pretty indiscriminate fashion, but that does also present some pretty decent opportunities as well. So I've added a few companies to the portfolio in the last few months. One of those would be Porvair, which was reinitiated. We used to hold this in the portfolio. This is a specialist filtration business, really very high quality industrial company, but its applications are scientific and they're industrial as well, but very high quality filters. That was added because it was sold off and we knew the company well. And it was a really simple decision to add it back into the portfolio. There will be some very second derivative effects, from what is happening in Eastern Europe. But by and large, this company will go through this and come out of the other side in a very strong and unaltered fashion. Another company we added, which will be the beneficiary of increased military spending, is Cohort, which is basically sort of a military consultancy based in the UK. And that's we see that there's a bit of a sea change in European countries with their appetite for military spending, and a way of getting access to that is through the likes of Cohort, which is really quite an under the radar company which is exposed to those revenue streams as well. And then finally, Braemar Shipping, which is a ship brokerage. Now that was added again, really attractive valuation, but also attractive backdrop as well. Ship brokers are beneficiaries of inflationary pressures within transportation, and those have been incredibly significant. And if you're making a margin on those and you're a high quality ship broker, you most likely do better than you would have otherwise done before those inflationary pressures came through.
Okay. And obviously a key part of your process is the face-to-face company meetings, and clearly for the past sort of couple of years, you really haven't been able to do that for obvious reasons with lockdown. Now things have reopened. Has it given you perhaps a boost in being able to sort of see people face to face, and have you had to sort of sharpen up your skills in terms of some of the things that you did in before that you obviously haven't done in the past couple of years?
The one thing that the lockdowns sort of enforced and made an absolute necessity was everyone had to adapt to working remotely, and it made everyone, all the management teams we speak to much more available, which was hugely beneficial to us. Whereas in the ordinary course of business, we would meet our investee companies twice a year, once the interim results, once the preliminary results. And, if we needed to get in contact with them, we might be able to set up an ad hoc meeting or a phone call. It just, the likes of Zoom and Teams, video conferencing has just made it's so convenient to have more, either shorter or just more same length catch-ups with management teams. One thing I'm really looking forward to now the country is opening back up again, or has opened back up again, is seeing more companies on the ground, which has been that's been something we've missed over the last couple of years. And it's a really important part, going and seeing the operations on the ground. These tend to be trips we organise ourselves. We're able usually to see over the quieter weeks in the summer about 25% of our portfolio holdings. That's really useful because we're meeting not just the executive management teams, but operational management teams as well.
And you mentioned earlier a company that you sort of had topped up your investment in. Does it help things like Zoom to move quickly for things like that? Perhaps
yeah, absolutely.
You didn't really realise beforehand that was quite a useful string to your bow to have that immediate access and the opportunity to move quite quickly on companies like that.
Yeah, that's a really good point, Chris. It makes everyone more available. We found, or we certainly found that trend. Maybe not everyone, but it has enabled us, because you're inconveniencing people, less than previously, where management teams felt like they had to dedicate an entire week to coming to London, or at least 2 or 3 days. And they would come and, they would have all the logistical problems of going from office to office, and whether that's in the city or the West End, it really wasn't a great use of their time. But, if you can they only need to give you 45 minutes to an hour and no other considerations around getting places. And so they tend to be very available if you need to speak to them.
And obviously we talked about COVID earlier. Touch with the restrictions have been lifted, and maybe we are at the other side. Do you think we're now in an environment where UK small companies will do well, or will high inflation and these geopolitical sort of fears put a damper on things? I mean, where do you think we are now for the sector?
I think that we're facing significant opportunity, but I think the UK, there's certain sectors. So I think the UK consumer, or the global consumer, in fact, is in for a pretty challenging time. You're seeing pretty pervasive effects of high energy costs, raw material and input costs. Generally, they all tend to find their way to sort of squeeze the consumer. So what we've done is we sort of limited that exposure within the fund. Over the last few months, we've reduced our consumer discretionary exposure by several percent, and it's sitting there lower than the sector. But for a non sort of fund specific answer, I think the valuations are great. You're seeing very attractively valued companies within the small co sector, which really have no exposure to geopolitical turmoil in Eastern Europe, but with either companies in their sector or just general outlook, which the market's very good at being indiscriminate when it sells off companies. And that, as I said earlier, that's presented us with plenty of opportunities. And the opportunity for the small co's market is that it can recover its value. It can recover its valuations.
You mentioned something there. I just want to touch on it briefly. Do you have to sort of strike a balance between sort of looking at a company specifically without any of the background noise of what's going on in the market, but also looking at the backdrop of what's going on globally as well? Do you find that something you have to sort of work on? As
stock pickers, we assess companies on individual metrics within those, whether they're financial or more qualitative. And as part of that process, we look to the company's positions within their market and the strength of their end market as well. And that strength is dependent on what's going on in the world, that strength of that market and the long-term trends for that. So that really, I suppose, shades a colour on our view of other more quantitative aspects of that company.
Okay. And just lastly, then, obviously, given we're in the small caps, we would be sort of remiss not to touch on a few more of these companies. So a couple of holdings caught my eye. Firstly, Tortilla Mexican Grill and the Fulham Shore, which are both restaurant companies, and also Premier Foods. What do you like about these companies specifically?
Sure, of course. Tortilla is a fast food chain, essentially. It's slightly fancier than fast food. It's burritos. There's not much of an offering for Mexican food within the UK market. They've seen a gap there and filled it at a very attractive price range. I think the average sort of item on the menu sells between £7 and £9. And it's all freshly prepared, but there is no real requirement to cook. So the capital expenditure on these sites, of which they are growing plenty of. I think there's 60 odd currently, and they're going to sort of add at least 50% to that over the next few years. They don't require much capital investment because there's a centralized kitchen which distributes on a daily basis all the fresh ingredients, and there's a number of items that are made in the store, but they don't need any specialist equipment to make them, and they don't really need many high or any highly qualified or highly trained chefs. So they're managing sort of the struggle that a lot of restaurant chains are finding at the moment with recruiting the right people, enough of them. And it's essentially an assembly line for very high quality, tasty food that's customizable, that's at a really attractive price point. And they're really well positioned to navigate inflationary pressures. So whilst I mentioned earlier that, I do feel the UK consumer is maybe facing a sort of tougher outlook towards the end of this year, I think that if you've got best in class at a good price point, you're pretty well protected from that. And if maybe people are trading down, or in price point terms, companies like Tortilla, like Fulham will do well. Fulham, just for information, they run a couple of restaurant chains. One's the Real Greek, one's the Francomanca pizza parlors. They had actually both of these companies, Tortilla and Francomanca, had, and it pains me to say, a very good lockdown. But the pandemic really did open up their offering to delivery, to takeaway, which really did increase exposure that they might not have had otherwise, where people were quite desperate to not cook at home anymore and maybe have a bit of a treat by getting something delivered in or going and picking it up. So they both did very well. And again, both growing stores at the right price tag, very high quality offerings. And I just think the future is very bright for both of those companies. You mentioned Premier Foods, yeah. This is a portfolio of consumer brands, which are everything from Mr. Kipling to Bird's Custard and Ambrosia, and very decent brands you recognize in the supermarket that have a strong and loyal customer following. This was added to the portfolio because it just represented tremendous value. I think it was less than 10 times when it was added to the portfolio. We can see now that they're able to grow not just in the UK, but they're growing in the US and Canada as they're introducing Kipling's and Ambrosia ice cream and various sort of new takes on good, well-regarded products and flavors. So it's a really interesting company to be exposed to, and it's just the strength of the consumer brands within it is very attractive.
That's great, Simon. Thank you very much for joining us today.
Thank you.
Unicorn UK Smaller Companies is a high conviction, concentrated portfolio that invests in genuinely smaller companies rather than mid-cap stocks. A large proportion of the research at Unicorn is performed in-house, allowing Unicorn to identify companies often missed by its peers. To learn more about the Unicorn UK Smaller Companies Fund, visit FundCalibre.com, and don't forget to subscribe to the Investing on the Go podcast, available wherever you get your podcasts. Please remember, we've been discussing individual companies to bring investing to life for you. It's not a recommendation to buy or sell. The fund may or may not still hold these companies at the time of listening. Elite ratings are based on FundCalibre's research methodology and are the opinion of FundCalibre's research team only.